Now, perhaps the first course in traditional investing management 101 is assessing equity risk premium, right? You want to determine, we just had this conversation about bonds, you know, the risk that owning bonds, stock rather, over bonds. It's ERP. Well, take a look at this, folks, because the ERP now is at levels. We're talking dot-com era levels. Joining me now, Main Street Asset Management, dear Chief Investment Officer Aaron Gibbs. Aaron, all right, so you got stocks like Super Microcomputer up 200 points today.
Yep.
It's got that feel. I already talked to Sam Stovall about it, maybe 97, 98. And the risk reward just isn't there. You know, you just heard a good case for a risk reward for owning a 10-year bond.
Yep.
But it's harder to argue the owning stocks the risk is worth it right now.
I think we really want to break down which asset classes when we're talking about stocks, because I know with that chart, a lot of that weighting is with those mega caps and the super large caps, and less so when it comes to some of your smaller and mid caps. So I agree that, you know, if you're just doing broad index buying, but I do think there are lower risk and better values within as you move down into those hidden gems, those smaller cap stocks. But look, just because the premium is high, it doesn't mean it's going to change in the next month or 2 months. And so we don't have a call or any real immediate signal saying this is going to happen right away.
So the bottom line is be aware of it, but you don't have to
be
take
aware
action.
of it. Be ready to rotate, and particularly when those signals start coming in, but the signals just aren't there just yet.
Well, speaking of being aware in signals, this 10-year yield, it's creeping back up.
Yep.
It's like it was supposed to be under 4 by now. It's creeping back up. We got a chart right here. What happens when it gets near 4.7, 4.8, 5? I mean, could it get back that high?
I believe so. And what's interesting is really we see that sort of trend just around Christmas of last year. So as it was falling, that's when we saw those small and mid caps outperform. Since then, we've really seen the mega caps return. These are our new safety stocks, the 21st century safety stocks. As long as that trend is there, I think we're going to continue to see that flight to large cap, mega cap, U.S. safety, again, making that premium very high, the equity risk premium, and until we see a big shift, and we know that's going to happen. I mean, we know eventually it's going to happen.
I can't let you go because you already teased us about the gems. You always have one. What's your gem of the week that no one's heard of?
I love my own names. So today is Bell Ring.
Bell Ring.
Bell Ring and Premium. It is a protein bar and protein powder, protein shake maker. And it makes premier protein bars and powders. It also is the protein powder inside the power bars. So they just have amazing distribution, really good 16% long-term growth, good valuations. I know you've never heard of it, but it's in the protein bar.
I eat protein bars. I've been lifting. I'm back in the gym.
Been eating it. Yeah.
BR. I'm going to check the labeling now on the back of my protein bars when I get home. You always find these, but I love it though. Aaron, thanks a lot. Appreciate it.
You're welcome.
All right, folks.